Welcome back to my morning report. Charles Prozers on Tuesday, the 17th of May, with me, Richard Perry, market analyst at Antec Markets. We're going to look at sterling dollar now. We've just had out the UK inflation data, missed expectations across the board. Really, we had the headline data falling to 0.3%. Down from the expectation of 0.5%, and also the core data on the year-on-year basis was fell to 1.2%, which had been expected to be 1.4%. So really disappointing numbers, pretty much across the board there. Sterling, however, is not fallen that much. It's sort of about 20 ticks down from just prior to the data. It seems as though that the positive Brexit poll, or for the Remain camp, seems to be still bolstering support there for cable. So. What we have got is this continued strength that we've seen today. It's about 70 odd ticks up on the day. But look at that move that we've seen from yesterday. So 43.30 up to 44.70 at the moment. So 140 ticks of turnaround. We actually saw almost a test of that big high of 45.30, which is really interesting because that is obviously your key near-term high. Didn't quite make it, 45.24, so just a few ticks underneath that before sort of reversing, and now obviously it's about 50 ticks off that. So that is going to be increasingly important as a resistance, I think, for sort of 45.30 for the near-term basis. Now look at these momentum indicators though. MACD lines sort of still positively configured, now flattening off above neutral. RSI still positively configured above 45, again turning up, and actually turning up higher than where it was back when it posted that high of 45.30. But the interesting one that I look at here is the stochastics. Now we're seeing the stochastics beginning to turn up. Is that going to turn out to be a crossover buy signal? Now the last few ones we've had have been pretty good. This one in February actually posted the low here. There were two in one in March, which didn't get too much traction before a correction, but that one in April really did get a good run. So the stochastic buy signals that we've had in the last few months have tended to work pretty well. So be careful of that if you're sort of playing cable on the short side. Got this the hourly chart, which you can see here. The reaction in the last hour or so has been for this sort of correction lower, and we are, as I said, about 15 to 20 ticks down from that inflation data, but a whole sort of about 50 ticks down from the reaction high that we saw today. But certainly the improvement has been seen, and we've seen the hourly RSI going way above 70, which would suggest a drive towards more positive momentum. Look at those MACD lines as well on the hourly, far more positive than they have been for throughout May, and also the stochastics. So perhaps there has been there certainly has been a change of sentiment in the last sort of 24 hours or so, and it'll be interesting to see if this continues to sort of build. Now what we have got is an initial sort of band of support, I think you could argue, between sort of 44 figure, which was that medium term level, but sort of up towards sort of 44.50 area, 44.60. So it's a pretty decent sort of band of support I think you've got in that level, in that range there. That it'll be interesting to see if the bulls can sort of maintain that support and then start to build from it again. But at the moment we're still reacting just near term to this little bit of the inflation disappointment. But it'll be interesting to see how the bulls react to that, and whether they can just hold the support up between that sort of 44 figure area to 44.50, because it could well be that we're going to put further pressure on that 45.30 mark, and if that were to be seen, then we'd be changing the outlook once again to far more positive outlook. So I wish you good luck in your trading today, and I'll speak to you later.